Good evening, all friends, and I wish everyone all the best for Navratri. I wish you a fantastic Navratri, and today is a blue day, and our background is blue. And ICI wishes the best part on all of you. And today I'm happy that during this Navratri we are able to have the session also, and as it is said, goddess Durga, and we always start with the goddess Saraswati and goddess Lakshmi, and all the goddesses, nine goddesses of Navratri also. So let the blessings of all the goddesses be there on all of us. I wish all of you the best and colorful Navratri and colorful year in for your career also. And today we have 24th Sky High Symposium. So since last 6 months, 8th March, Women's Day, what I recollect, we have started with the program for women and continuing with this Sky High Symposium. It's really wonderful to have forthcoming Silver Jubilee for our Sky High Symposium and then on the next Wednesday. So it becomes a sense of satisfaction when we organize and accomplish certain thing. The vision what we have when we accomplish that with the support of all the speakers, coordinators, and all of you, the viewers. So today we have with us C. Aarti Karvande, and she will be taking us through the Fema compliances for the auditors. So it's very relevant for today also because the tax audit season is also there, and statutory audits also we are doing. CA Divya Abhishek will be going us through the recent amendments in CSR. So section 135 and the CSR certification is also mandatory from the current year. And we are doing a lot of things in our corporate laws and corporate governance committee as being I'm the vice chairperson of CLCGC. We have with us very wonderful coordinators, the moderators with us, CA Mittal Sangoy, CA Shraddha Jape, CA Shilpa Bhandari ji, and CA Gyati Gupta, and all my beautiful intelligent participants. It gives me immense pleasure. It's endeavor to serve the best. Again, as I have declared earlier also, we are coming up with a special campus placement program only for women chartered accountants who want flexi working hours or part-time working hours or work from home. The details have already been through, and in the forthcoming journal also you will find the details about this campus placement program. At present, we are reaching out to the corporates, the companies who are having such plans of flexi working hours. And once we are compiling the list of the companies, it will be in the campus placement will take place in the month of October. So again, in the areas of company law, the new LLP version 3 forms have already come. If you find any issues, please reach out to us. The new company law form, the ROC, this new companies form also are floated. 11 forms have already been out, version 3. Even ROC wants, the Ministry of Corporate Affairs want, not in the PDF, but online forms. So all these efforts are going on, and we are supporting to Ministry of Corporate Affairs in by reviewing these forms and giving the feedback, what are the issues, and supporting our members also by bringing the bridge between the ministry and the members who are facing the issues in filing the forms. In sustainability arena, as I am a part of Sustainability Reporting Standard Board, we are doing a lot of things in relation to the sustainability development goals and social audits, as well as we have already formed the Institute of Social Auditors of India. in relation for the audits of the company, of the charitable trust and Section 8 companies who will be listed on the social stock exchange. And very soon the examinations also will be conducted by NISM for becoming the social auditors. At present, from Board of Studies, various things are going on in relation to preparation of the syllabus for the forthcoming new education and training for CA Foundation, Intermediate, and CA Final students. I request, and as especially as regards to Women Member Empowerment Committee, we are doing a lot of things. As all of you are aware, we are meeting on each Wednesday over Sky High Symposium. So please block your dates every Wednesday, 5 to 7 for Sky High Symposium. With these words, I once again welcome all of you and opening this 24th series of Sky High Symposium. And I request Mittal Sangoy to please introduce our first speaker for the day, CA Aarti Karwande. Thank you so much.
Thank you, Preeti ma'am. It's my honor to introduce CA Aarti Karwande. CA Aarti Karwande is a qualified chartered accountant with over 15 years of post-qualification experience. She's a partner with Hinesh R. Doshi and Company LLP and is associated with the firm since 2005. She has rich experience in the fields of assurance, transfer pricing, Fema regulation with respect to inbound and outbound investments, RBI compounding matters, international tax, advisory services, due diligence services, etc. for various globally recognized MNCs. She mainly focuses on Fema advisory services and regulatory compliances for her firm's clientele. She had also represented firm for ISI certification as management representative. She has co-authored several articles on international tax and Fema for CTC. Before joining Hinesh R. Company Adoshi and Company LLP, she had worked for 3 years with Mr. Praful Chachad, our past president of ICAI. With this brief introduction, I would like to thank Aarti for accepting our invitation and addressing the members. On behalf of Women's Empowerment Committee, I would like to welcome CA Aarti Karwande. Ma'am, the floor is all yours today.
Thank you.
Thank you.
Thank you. Thanks a lot for the kind introduction. Am I audible? Am I audible? Divya?
Yes, ma'am, you are audible.
Okay. So thanks a lot for the kind introduction. And on the occasion of Navratri, I take this opportunity to have a kind blessings and things from Ma Durga. And for this opportunity, I'm very happy to be associated with the team members. I used to see WhatsApp by Preeti for these things, and I used to wonder, let me also try to join some sessions. Maybe I'm here in through this as a speaker and then a learner throughout my career. And it's very good platform. I really appreciate Preeti for all these things, what you people are doing for women empowerment. I'll share my screen now. So I have I got a call from Jaya 2 weeks back for this. I thought which topic to take, and as Divya informed that I always check for Fema compliances for our clientele in the firm. I thought let me share few of very important points. This session is not to give in-depth knowledge, because in 1 hour it's not possible for anyone to give everything relating to Fema. I thought let me compile few key pointers which will help all our female chartered accountants working day and night at home and in office. At least some brief ideas or brief key points which they can concentrate and check whether or not these points are being complied with. So this is the index what I have covered. I'll try to cover all the points, but maybe if we are not able to cover in the 1 hour session. Let me see what important points I can choose and convey you all the important topics. Before starting with this topic, let me tell you why FDI in current era is important. If you see the chart, in 20 years, the FDI inflow has increased about 20 times over these years, from 2000 to 2022. It's 20 times increased what India is getting FDI. It's foreign direct investment. Cumulatively, FDI inflow stands now at US dollars 847.40 billion. This is the strength of India in Fema, FDI. If you go country-wise, India is getting FDI mainly from Singapore. Singapore stands as a first level country wherein we are getting maximum FDI, then US, Mauritius, and then Netherlands. Talking about incorporation in India, a foreign promoted companies, I could compile only for last 4 months. If you see every month on an average, 175 companies are incorporated all over India, which has foreign promoters. So this is what now it's on increasing trend. And the requirement of all you people around to understand what are the basic things to check when you're doing audit for a company which is an MNC, which has foreign promoters or which deals into international transaction other than FDI as well. If you see sector-wise, computer and hardware industry gets maximum number of FDI. They get foreign promoters investing into their sector. Then we have automobile sector, trading sector, and construction industry. The preference of FDI in India. If you go state-wise, highest state receiving FDI as per statistical data available on FIFP or DIPP portal, it's Karnataka, then Maharashtra, Delhi, Gujarat, and Haryana. So you can see it's very important nowadays in current era that we are receiving FDI or we are having international transactions nowadays due to, if you see the government's efforts to have that make in India concept and inviting foreign investors to ease of doing business, what they are introducing, more and more foreign entities are getting attracted to India. Due to this, it becomes very important subject to take care while dealing with audits. Audits or many advisory assignments as well. So friends, the history of Fema comes from the year 1939. It was during that Second World War, a temporary measure it was introduced. However, then they implemented through FERA 1947. Again, it was a very basic law, very basic, taking care of only export, import, or any foreign exchange transactions. Then in 1973, it reappeared in a new avatar of FERA, which was actually what I have heard from my seniors every time. It was a draconian law because it had criminal implications if you contravene any regulation. Then post-liberalization in 1991 and attracting more and more foreign investment, the government then revived the provisions of FERA. In 1999, we got FEMA, which was implemented from June 2000, 1st June 2000, to replace existing FERA with FEMA, which relaxed with a liberal and less draconian implications. So what is the objective of FEMA usually? If we see earlier, it was like controlling the foreign exchange. But now with FEMA, it's regulating and management of foreign exchange. How does RBI and central government does it? So basically, they have divided the transaction into current account and capital account transaction. And then they regulate all, these two segments with like either giving the regulation how to deal with in foreign exchange, what are the requirement or limits of holding the foreign exchange. If you are dealing into export and import of goods, how can you do it? What are the time limitations? And once you do those, what is the periodicity of getting this foreign exchange in India and repatriating the foreign exchange in India? So this is what FEMA law is about. It tells you how to regulate and manage the foreign exchange currency. So if you see structure of Fema, it has 7 chapters and 49 sections. If you could do income tax with huge number of section, company law with huge number of section, I think Fema is a small baby for understanding the implication. But yes, Fema usually, if you see, it's with respect to your intention of doing the transaction. So company income tax has some way out to deal with the kind of transaction. Fema is not like that. Fema is purely upon your intention of doing the transaction. If you see at right side, I have mentioned a key line. When you deal into Fema, you have to understand one thing. What you cannot do directly, you cannot do indirectly. This is the main line in Fema. If you advise your client, if he comes to you for any opinion, okay, I want to do, please make a way out. Fema is not for that. Fema's RBI specifically says, if I have given the regulation, if I have prohibited, if I have regulated, you have to follow that. There is no other way out, because it is thought process given by RBI to regulate the Fema foreign currency. So main operating section in Fema are from section 1 to 9, which guides you for definition, restriction, holding on foreign currency, what is current account, what is capital account transaction, export of goods and services, and realization and repatriation. Rest others are like procedural or administrative part or enforcement provision from section 10 to section 49. Many times, if we see, okay, if I want to understand what is the foreign Fema implication into this transaction, what people usually do, go on Google, search, okay, within how much time I need to get the foreign remittance? Can I do export with this country? So just for benefit of everyone, what we did, I compiled what are the policy instrument under Fema, that if you are advising or you want to understand a specific transaction, what things you should know with respect to those things. Like if I want to understand what is FDI, what are the pointers, what are the key pointers, what are the restrictions, prohibitions, which allows FDI or restricts FDI into India. What are the things I need to know? Like in income tax, you need to know the section, the rules, latest case laws, latest updates. Likewise, Fema has list of things that you need to know. Say for what is issued by RBI? Notifications are issued by RBI and central government, which makes rules and regulation. Rules are made by central government and RBI prescribes regulation, through which you need to understand the process and thought process, what they want you to implement. Then APDIR series circular are issued by RBI for bankers. Through this APDIR, RBI instruct bankers, okay, these are the things you need to take care when dealing into this transaction. These are the timelines. These are the formats you need to know, and you need to make your customers aware about it. Then press notes by DPIIT. Master direction is like a compilation of all the notifications, rules and regulations. Earlier it was master circular, wherein every year in June or July they used to come with the sunset clause that master circular is valid for 1 year. Now we have master directions. Master directions are a compilation of all the updation. If you go into that RBI, the link given by me, it will be as on date, whenever the last update you will get on the screen. This is the master direction updated as per notification, whatever is latest available. So it's a regular updated instructions, compilation of rules and regulations. DPIIT comes with FDI policy, which is again a compilation of all required rules, regulation, instruction, forms, formats for FDI, which you need to know and you will get at one point of time. As a supporting, FAQs and compounding orders are also available, which helps you to understand some nitty-gritty which may not be directly given or prescribed under rules, regulation, instructions or APDIR. These FAQs helps you to say yes or no for any kind of transaction. And the compounding orders are sometimes like if someone has made any contravention, they go to RBI, say, okay, I did the mistake, please rectify or please contravene this. They issue the orders, and these are available on the RBI website, which gives detailed things. What contraventions are made, what are the regulations they have not followed, what is the amount involved, quantum involved, timeline involved, and what compounding fee RBI has charged. But mind you that we should not have this as base for any opinion purpose. It is just to clear our doubts. Like we have a habit in income tax, we say, okay, as per this case law, this benefit was given. So I can depend on this and contend this matter in CIT or ITAC. In RBI, it does not work. It purely depends on the intention and the background of the transaction, and RBI decides accordingly. So I cannot give reference of any earlier compounding order and do the transaction and then say RBI, okay, you have considered his request, please consider mine also. It's not done. Just for reference and more understanding part of it. What I have done is I have divided the things in balance sheet where it falls, and I have compiled the related regulations, rules, notifications, RBI, master direction, so that it can help you out to understand in case you need to study something about investment, what are the regulations or notifications you need to refer through this. You can go through that and you may get your answers, and you can discuss it further with the other professionals or opine to your clients accordingly. So basically the nature of transaction, as I told you, it's divided into two segments, capital account and current account. The base of Fema is on this, whether it is a capital account transaction or current account transaction, and then moves it ahead. So if it is involving borrowing, lending or guarantee, any transaction your client has done with respect to borrowing, lending or guarantee, you have to refer to the regulation, FEM borrowing and lending regulations. For guarantee, you have to refer to the FEMA guarantee regulations 2000. For asset, like investment rules, which has recently come out in the month of August, updated or revived. Then for FDI, you have FEM non-debt instrument rules, which was out in 2019. For others, like if you have branch office in India, the establishment of BO, LO and PO regulations you need to refer. Export of goods and services, currency accounts that you can maintain in and out India, issue of securities, mode of payment, and the consolidated FDI policy. So friends, as I said, the overall scheme of FEMA is classified into two heads. One is capital account and one is current account. You need to first understand whether the transactions referred to you or what you are checking, it falls under capital account or falls under current account transaction. Then you may go ahead further to understand what regulation, what notification, and what implication or what RBI has prescribed about this transaction. Usually, it is defined a transaction which alters the assets and liabilities. Person in outside India of a person resident in India, and in India of a resident outside, in India of persons resident outside India. So if it affects assets and liability side, it falls under capital account. And usually these capital account transactions are permitted to the extent allowed by RBI. So it's not general permission given to each and every capital account transaction. It is regulated. Vice versa, current account transaction, it is like what does not fall under capital account, it falls under current account transaction. There will be always only two options. Is it current or is it capital? So we first need to check whether it is a capital account transaction. If it does not falls under the capital account transactions prescribed by RBI or central government, it will by default fall under current account transaction. And unless it is restricted, specifically restricted, it is allowed. It is generally permissible. So what are the capital account transactions? Again, RBI has prescribed in the regulation the schedules wherein you need to go if it's a capital account transaction, whether it is for a person resident in India or a person resident outside India having asset or liabilities in India. Based on that, you need to refer the schedules given in the regulation and whether or not these are prohibited. So prohibited means It's not permitted at all. Even by making application to RBI, RBI won't allow that. So these are classified as Schedule 1, Schedule 2, and the prohibited list in the capital account transaction. Again, current account transaction also has schedules, which Schedule 1 is a prohibited. You cannot deal into these transactions. You cannot remit for these transactions, for prohibited transaction, like central government. And Schedule 3, it requires prior approval of RBI. So what compliance? We need to know what if my client does not follow Fema? What would be the implication? Usually we use the word contravention in Fema. That if any client comes and say, okay, I have got foreign remittance. I say, for what purpose? No, I did not have working capital. I called in the amount. I said, no, you have contravened the law. He says, what do you mean by contravention? So contravention means breach of all these things which is prescribed by, issued by RBI. It can be rules, it can be regulation, notification, direction, circular, provision. Like Fema, you have to read. In line with all these things, a single regulation, a single notification will not help you to understand the implication and guide your client way forward. So this is what contravention is. If something is allowed, and yes, but FEMA also requires reporting compliance, but you don't do it, it's again a contravention. Something RBI says you cannot bring in funds other than by way of FDI or ECB, but the client brings in and show other undercurrent liabilities, it's a contravention. Because there are prescribed regulation to follow before doing these transactions. So these are statistical, this is the statistical data on RBI website, wherein if you can see there are compounding applications finalized by RBI. These are only the applications which client has gone to RBI, knowing their mistake, and asked them to compound for that. So like if you see the maximum compound application relates to FDI. People are not at all aware. They form the company through foreign promoters, but they are not aware what things to be taken care of, whether it's an automatic approval or prohibited sector or government approval. Once they get FDI, they are not reporting it. They just issue the share capital, don't file FCGPR. If you are an FDI company, annual reporting is required through Form FLA. That is not being done. So there are, for a specific thing, many compliances to be followed for each and every regulation. Is direct investment, which is when an invest outside India, ECB and others would have immobile property holdings, wrong foreign currency accounts. And so if I want to, what are the generally committed contravention? Maybe I would say only FDI, FCGPR and all. What we did is I went through many compounding orders, and for the sake of benefit of all the participant, I compiled this contravention list into these segments. Like in FDI, what would you say is a contravention? It's like non-reporting of inward remittance. Earlier, it was required that once you receive foreign inward for FDI, you have to file Form ARF, which is not a requirement now. Once you get the FDI, there is a timeline for FEMA. There is always a timeline for everything. Once you get the funds, within how much time you should issue the shares. Once you export the goods, within how much time you should realize it. Once you get dividend outside India, within how many days you need to repatriate it. Everything has a timeline. Same in FDI, you have to allot the shares within equity instruments within 60 days. Once it is allotted, the next step would be filing of FCGPR, which is not done. It's a contravention. Non-submission of FCTRS. Issue of instruments which other than equity shares which are not allowed, optionally convertible, not allowed under FDI. And non-compliance of any other, like if you have again like non-compliance of valuation guidelines, non-submission of any specific FLA annual return filing. These are generally committed contravention for FDI. Overseas investment, it's like once your Indian company makes investment outside India, again it has to follow some regulation, reporting requirement, approval route in case it is not allowed. The criteria is given, submission of share certificate, again an annual filing in form ODI, APR. If all these things, whatever is mentioned in the notification or regulation is not followed by the Indian company, again it amounts to contravention. Same for ECB. ECB is external commercial borrowing. If any Indian company requires funds, not able to generate loan or get loan in bank account, they go to their foreign promoters. Can you please give me loan? There is a fund process of getting the ECB into India. You have to apply through a form ECB, get the LRN, schedule the drawdown and repayment. The borrower should be eligible, the lender should be recognized lender. There is a minimum average maturity period required. It's not like I get the funds and I'll pay it only after within 1 year or something like this. Once you get the ECB, again a monthly reporting is required and it is to be done. So these are, if you see compounding order compilation, these are the mistakes made by the client or may not be identified as a professional from your end with respect to your clients. Friends, this is balance sheet format wherein the highlighted portion I will tell you in case you have any of these transactions under this head with a foreign party. Few important points you need to know and check while finalizing the balance sheet or signing the balance sheet as a basic documentation in your working files. So we start with share capital. Say for example, you have an MNC. They get FDI. So you need to know what are the things I should be aware. Where should I find all these regulations, rules, and this? So you need to refer these basic things, at least 4 to 5 basic things to understand how FDI is regulated, what are the rules, what are the regulations, what are the reporting guidelines, and what are the annual compliances I need to know. Reading and understanding of all these policy instruments would give you a fair idea to understand whether or not your client is compliant with respect to FDI. For loans, ECB and trade credit, like payment for suppliers credit or payment beyond 3 years, deferred payment basis, these 3 policy instruments would help you to understand the implications, the rules, regulations, and reporting formalities. Again, trade payable imports. Import is mainly regulated by current account transactions rule, and there's a master direction for import which gives you what is the timeline, what if you cannot pay, what if you want to write back. All these instructions and regulations are given in the master direction. If you want to acquire immobile property outside India, if you want to set up a company outside India, what are the things, policy instruments you should refer here? Overseas investment, same. Majorly we identify the non-compliances of downstream investment. The reason being, in downstream investment, the funds like share capital flows from Indian company to another Indian company. So there are no foreign exchange flowing here. So for example, if I have a foreign promoted company, FCO1, it invests into ICO1, Indian company 1. This segment is FDI, wherein you get foreign currency, you need to follow the NDI rules, you need to allot the shares and file FCGPR. Now, if ICO1 wants to further invest in ICO2, this tranche falls under downstream investment. And as only Indian money is flowing, people like professionals do not come to know, or neither client is aware there is a reporting requirement into this also. It is also regulated because RBI says the first ICO1 has foreign investment. The second ICO2, wherein the investment flows also have to be compliant with the Fema regulation. So if you remember in the 4th or 5th slide, I said what you cannot do directly, you cannot do indirectly is majorly regulated into this downstream investment. Say for ICO 1, something FDI is a prohibited sector. They bring in FDI through allowed sector, and then through ICO 1 invest into ICO 2, which is into prohibited sector. So this is not allowed. Once you are a foreign owned and controlled company, the ICO 1, Indian Company 1, you have to take care and comply with all the required regulation for Fema going ahead for ICO 2 as well. So these are the things you need to know and go through it when you finalize or have a balance sheet review. When you have long-term loans, usually people take advances from foreign entities for advance for exports and all as a second or secondary method for getting funding. Again, it is not allowed. You have to comply with the regulation of making exports within a year or refunding back with the reason. Once or twice is fine. If it is found is frequent methodology adopted by the Indian company, you may be getting notice from ED for that. If you want to set up a branch office in India, yes, there is a possibility. However, again, following through the necessary rules, regulations, reporting requirement, and the instructions. If you have trade receivable, again, the same thing, you have to realize within 9 months from foreign parties. If you want to have a foreign currency outside India, or a foreign non-resident wants to have a foreign currency in India, the instructions and regulations are given in this regulations. Overseas guarantee is regulated by Fema 8. Coming to P&L. So what I am not going into nitty-gritties of what things to be checked, because my intention here is, as I said, there are given into these policy instruments, and being, if you want to deal into Fema, a reading of these things is a prerequisite. Just if I tell you, okay, see only these are not the points, because it depends on case to case basis. What are the background, what are the facts, what are the circumstances of the transaction, and then accordingly you need to deal with it. Coming to profit and loss, if it's an export sales, the Fema 23R gives you the methodology, timeline, write-off options, receivable options, self write-off, net off, everything. So you need to understand the regulations mentioned thereon. If it's interest income, again, Fema 3R says if you want to, Fema 3R or overseas investment thing, it gives you the required guidelines, how much to charge, when to repatriate the funds, and whether or not to, and what is the cap of interest into it. Purchases, current account transaction rule to be referred, and the master direction giving you time. Bad debts write-off. This again is many a times what we have seen, that okay, they do exports, because we generally follow 3 years timeline in India for any bad debts write-off. They just write it off. It's not like that, Fema. You have to see, you have to take care of the guidelines prescribed by RBI. You have to coordinate with your banker. If it is below, above the timeline, AD Bank will coordinate with RBI, get the required permission. Only thereon, the bad debts write-off will be allowed in your books of accounts. It's not 3 years timeline over here for Fema. Interest on loan, the cap and required regulated instructions given in Fema 3R. Any other expenses, like any remittances to be made, be guided with the master direction number 8, wherein it will give you, in case of any, if a company is in process of liquidation, how it can remit the balance funds outside India. Is it allowed, not allowed? At the time of remittance, what AD Bank would require from your end? What documents are the basic documents you need to keep on record? Royalty payment. Now it's actually, there is no cap. Earlier it was in Schedule 2. From 2009 onwards, there is no cap for royalty payments or prohibition for royalty under Fema. It was earlier something 2% on export and 8% on domestic, something like that, as a cap at the time of remittance. Now there is no such restrictions into royalty. So as I said, if your client wants to have FDI, ECB, doing export, doing import, they are allowed to do it as per the required notifications and master directions or regulations. However, FEMA requires many reporting compliances by the Indian companies dealing into this. It's not that you just get the funds and do the business. Once you get the funds or once you make investment outside India, RBI wants you to report every penny of it to it, maybe on monthly basis or an annual basis. So let us understand what are the reporting requirements. Friends, as I said, FDI, there are two segments, like automatic, which is wherein generally does not require RBI approval. Government route, few sectors requires RBI approval for going before bringing to FDI. And there are few sectors wherein FDI is strictly prohibited. These are the prohibited sectors wherein RBI will not allow the Indian company to get in FDI for doing business in India. Once you get the FDI, you need to see under which schedule it falls, because every schedule has a different instructions, regulations, and reporting requirement. So there are 10 schedules under FDI for inbound investment, wherein you need to know whether the investment is from a NRI on repatriate basis or non-repatriation basis, whether investment is into LLP or an foreign venture capital or an investment vehicle. Accordingly, the schedule is applicable and the reporting requirements and mode of payment becomes applicable in your case. So I've compiled the forms, the timelines for each category, which is described in the earlier slide. So in case it's an existing FDI, form EMF was introduced in 2018, wherein you have to create the database onto the RBI portal, giving the status as on that date, what is the FDI till date, and whether or not all forms filing have been done from your end. After that, the new portal of forms portal has been introduced by RBI, wherein any form filing should be done through SMS, single master form. Like if it is FCGPR or FCTRS, form DI, LLP, form INV, all these forms are through RBI portal. On extreme right, I have given the website address wherein you will get FAQs, forms, prescriptions, and the login ID to be created over there. These till form ESOP, there is a reporting guideline like transaction basis. Once you get FDI, you report through FCGPR. Once you transfer the shares, file FCTRS. However, once FDI is into your company or once you make overseas investment outside India, other than this transaction reporting, annually, the Indian company is required to file form FLA on RBI portal, which is FLA@RBI.org. It's a form FLA. You need to send the email. Now a separate portal is introduced by RBI to create and the they don't follow all these reporting guidelines. RBI will levy late submission fee. This is introduced in November. It's aware that compounding or LSF is for reporting.
मैम आपकी तरफ ये वीडियो स्टिक होकर नेटवर्क प्रॉब्लम आ रही है.
Something which is not allowed, some forms only if you
सुन पा रहे मैम मुझे? Are you audible, ma'am?
Yeah. Sorry for that.
नेटवर्क इश्यू आ रहा है मैम आपकी तरफ.
Am I audible?
या बीच में स्टिक हो रहा है ऑडियो वीडियो आपका.
Sorry. Yeah. So my screen is visible.
Yes, ma'am.
Yes, ma'am.
Sorry for the inconvenience.
नेटवर्क प्रॉब्लम से.
Yeah, sorry for the inconvenience.
Please
So I was
continue.
on the point that, sure. So I was on the point that once you don't follow these instructions, rules and regulations, RBI will now provide you LSF, late submission fee, which is a calculation and tabular given by the RBI, wherein it depends on and the periodicity. And the percentage gets doubled every 12 months. So as early as possible, in ECB, there are procedural part like what does comply with ECB, what are the requirements, what are the parameters you need to know when you have in your balance sheet the external borrowings made by Indian company from a foreign party. There are few parameters that you need to check about maturity period, permitted end use, not permitted, maximum, all-in cost, and all the things. These are the cumulative key parameters. These are the cumulative things. Like it's not like you can pick and choose few of them and go away with few of them. This is the negative list, restricted, wherein you cannot use your ECB. ECB is always allowed with specific purpose for which the money comes in. You have to utilize the funds for that and then report to RBI through form ECB2 on month-on-month basis. If you want to take ECB or if your client has taken ECB, this is the process. You need to see that whether it has obtained, it has submitted form ECB, whether it has procured LRN, whether the purpose is proper, whether the utilization is proper or not. So these are the important points when you need to check whether ECB things have been complied with. Checklist of ECB2. Every month, once you get ECB, you have to submit form ECB2 to RBI through your AD bankers, wherein you, being a chartered accountant or a CS, has to certify whether the utilization is for the purpose for which ECB has been procured. In case of any change in the parameters in ECB, name of borrower, lender, ECB end use, you can switch into the end use allowed by RBI. If there is a cancellation of unutilized amount, if AD bank needs to be changed, if currency of borrowing needs to be changed, if drawdown on repayment schedule needs to be changed, this change has to be informed to RBI through your AD bankers within 7 days by submission of revised form ECB and with the consent of your lender. If you want to convert your ECB into equity, there is an option, but with a reporting compliance of filing form FCGPR for converted amount and for balance amount filing form ECB for till the utilization period is not lapsed. For ECB also, there is a late submission fee if you do not comply with the reporting guidelines. They charge you late submission fee. So mind you, they are very, very particular. Once you get the fund, your duty is not over. You have to report to RBI with respect to the required utilization of your ECB amount. Export of goods cover the timeline given. If you are exporting goods to your warehouse outside India, the limits is 15 months from the date of shipment. Any other case, it's like 9 months from the date of export, you have to get the funds in, realization of your export proceeds. Say, for example, if you don't get it, you can apply to AD banker for extension up to further 6 months. So it's not like, okay, nahi laya to nahi laya. The client has to make an application to AD bank, giving the reason, genuine reason. It may take some time. So please take it on your record, and my party will remit the amount maybe in further 6 months. AD banker with approved approval given by RBI is allowed to give you extension every time. But beyond 1 year, or the limit is given by RBI, it cannot go beyond that time limit or the average amount which is given in the PPT. If your client wants to write off the unrealized exports amount, there is a mechanism given by Fema, RBI, wherein if you are a status holder exporter, your client, it can self-write off. No need to go to banker or RBI. It can self-write off 10% of the export proceeds realized during the previous calendar year. So if it is no export at all, no realization, the option available to your client would be to approach RBI. If it is other than export holder, it's 5% limit. Otherwise, please, if you are not into this, please approach AD banker. As I said, you just cannot do it on your own. All these things are recorded or lodged with AD bank as EDPMS in their system. So they usually have a track of all the exports made by you, and they keep following up with the Indian parties where if the EDPMS is open, if it is not attended on frequent basis, the report goes to ED and you have to face the ED crux for that matter. For import of goods also, the time limit is given 6 months. For deferred payment, it's 5 years. And import of books allowed without any restrictions. Again, import also, AD bank, you can approach AD bank for any extension. 6 months basis. Beyond years, they cannot allow you. It has to be then reported or taken approval from RBI. As I said, if I've done export and import with the same party, same overseas party, sometimes you say, why to send the money again receive back? There would be a hit of foreign exchange. RBI has given you an option of set off with respect to this instruction within the same calendar year. The invoices are, and the set of import and export lag has to be with the same AD banker, and the request of set off has to come from the buyer and supplier, both the end. In this case, you can surely go for knocking import and export by submission of required application to your banker. However, please note this facility is not available for services, only and only for goods. So friends, at the end, I would say it is better to be compliant rather than going for compounding, and our clients facing any intricacies or non-compliances or notices from ED or banker, let them concentrate on their business and let us help them more compliant and more vigilant about all these transactions. So I'm done with we have any questions, we can surely attend for that. I hope I've given enough material to study and explore for new parameters. So Divya, any questions? I think I have 5 more minutes, 2 or 4 minutes more.
Yes, ma'am. Actually, one person wants more practical examples about compliances.
See, as I said, it is transaction based. So if they want practical, I'll tell you what had happened. In 2 months back, we received some other audit which has foreign investment into it. We were just reviewing balance sheet. We saw current liabilities has a huge balance. When we inquired, they said it is received their foreign promoter. When we dig into it, we saw that the amount has been working capital. When we checked, okay, as if you have got the foreign remittances, what are the compliances you have done? So they said, no, nothing done. Because we wanted money, our promoter had money, they sent it. So we said it's not like that. If there is a foreign currency transaction, you first analyze whether it is a current or capital account. Loan being a capital account transaction, it is more regulated. You have to follow the necessary compliance of filing form ECB, getting LRN, loan registration number, and then getting the money into India and utilizing for the purpose for which ECB is applied for. Once you get ECB, and you start utilizing the amount, every month you have to report to RBI through form ECB till you repay the amount or convert it into equity. So these are the things they need to follow. They were not aware at all. Now what? We have to go to RBI for compounding. After making it good. So compounding process is something you have to make good the wrong things or non-reporting compliances. Only then RBI will entertain your application for compounding. So if you have FDI and you have not allotted the shares or not filed the FCGPR, first you need to do that and then go for compounding, asking RBI to please don't the delay and the reporting. You need to pay the compounding fee and then you're out of it. Then nobody will ever bother you for that matter, for reporting compliances. You will not get notice from ED or any inquiry from any other government offices. So this is the methodology adopted by RBI. So if they want any specific thing, like as I said, it is depending on the transaction what you are doing. Every transactions in Fema is regulated to be reported and to be complied with. It can be downstream investment, it can be ECB, it can be exports, imports, wherever the international leg is it.
Any more questions? I think no questions here. First of all, good evening everyone present here. Honorable Chairperson of WMSC, CS Shri Priya Kumar ma'am, and our beloved role model, CCMCA Preeti Savla ma'am, and all the participants. Thank you, CART ma'am, for such an informative session. Your detailed PPT is very useful. If possible, you can share with the participants. Sure. Most of the times we feel Fema as most complicated subject. Actually, it is made for smooth external transactions and healthy foreign exchange market, but it is really very complicated. But your presentation is really very informative. It is an honor for me to get this opportunity to thank you all the dignitaries. On behalf of Women Members Empowerment Committee of ICI, I express my gratitude to CA Aarti Karwande ma'am, who made her contributions in Fema compliances for auditors. I would also like to express my gratitude to all the esteemed delegates of the webinar who are present and all the participants. Thank you, ma'am.
Thank you. Thank you.
Hello, everyone.
Sections of Shraddha chapter.
Yeah, thank you, Shilpa. Hello, everybody. Here I have the opportunity to introduce our next speaker, CA Divya Abhishek. CA Divya Abhishek is a practicing chartered accountant. She is a Bachelor of Commerce from Madras University, Associate Member of the Institute of Cost Accountants of India, Fellow Member of the Institute of Chartered Accountant of India, Associate Member of the Institute of Company Secretaries of India, and a graduate in law. She had secured All India 46th rank in the Chartered Accountancy Final Examination and All India 23rd rank in the Company Secretaryship Examination. She has also secured All India 4th rank in the International Taxation Examinations conducted by CIOT UK and has obtained her certification in International Tax Law and Transfer Pricing from Leiden University, Netherlands, International Taxation Center, under the guidance of the world-renowned professor Kees van Rad. She has completed her diploma in IFRS with ACCA London. She has qualified in the proficiency test for independent directors conducted by the Indian Institute of Corporate Affairs. Divya has also completed her MBA and has attended special sessions at Harvard University. Divya Abhishek is the youngest professional to reach this milestone. Divya Abhishek is the Secretary of Women Empowerment Forum of India. She has the distinction of being the first Secretary, Business Development and Trade Relations to the Honorary Council of Zambia, South India. She has addressed over 800 conferences organized by corporate forums, professional bodies, chambers of commerce, universities, and colleges. She has co-authored a book on income tax ready referencer. She has been nominated in the committee constituted by Southern India Regional Council of the Institute of Chartered Accountants of India in Corporate Law and Allied Laws from 2017 to 2022. She has been nominated as a member of Corporate Law Committee of the Institute of Cost Accountants of India for the year 2022-23. She is in the advisory committee for SSS Jain College and SDNB Vaishnav College and a visiting professor at Madras University. She was the youngest ever president of the inner wheel of the Rotary Club of Madras, Next Gen. She has been elected as the treasurer for Federation of Indian Chambers of Commerce and Industry for Women for the year 2019 to 2023. Being passionate about women empowerment, she has spearheaded in Committee for Women Empowerment for Hindustan Chamber of Commerce and is an elected mentor for FICCI Mentorship Cell to guide women entrepreneurs on all financial matters. With this interesting introduction, I request CA Divya Abhishek to take on the session. Thank you.
Thank you so much, Shraddha ma'am, for the very humbling introduction. A very good evening to one and all present. My respect to the ever so dynamic Central Council member, Sri Priya madam and Preeti madam, both of whom are huge role models in my life and carve the path for women leaders for the way forward. Aarti madam, absolutely fantastic presentation. In fact, to understand such a complex law of Fema, the way you concised it and made it easy for members is truly noteworthy. Thank you so much. A very good evening to all the participants and the organizing committee. In fact, it is so well organized for women, by the women, gives me immense pride and pleasure to be a part of this session. With that, let's get started for today's session, which is going to be on corporate social responsibility. Friends, gone are the days where traditionally we look at a setup about maximizing profits to shareholders, wealth maximization. Today, as we speak, the world has evolved to a different sphere and dimension, where interestingly, we feel that corporate social responsibility is one other disclosure requirement, but that is where I want to correct you. Even though the Companies Act 2013 has not fundamentally changed those 9 subclauses in Section 135, what we have to remember is more than 30 circulars and notifications that have come out. As we speak today, as latest as September 20th, 2022, 3 very important amendments came in CSR. As latest as July 2020, National Exchange for CSR has now been made live. So, increasingly, we can see the core focus of MCA and the government has been in the sphere of CSR and the latest amendments. Therefore, as professionals, we need to be abreast with these changes and also create niche and opportunities in taking up new assignments. Now, this is not new. We all know that India is one of the first countries to mandate CSR spending. They first came out as a recommendatory, just disclosed in board report. Today, if you do not comply with CSR, please pay penalty. So this is where this is at. And a lot of us assume, okay, this is just another disclosure standard. As long as I'm doing what is required, it is enough. Friends, I also want to tell you, as you can see the screen, this Volkswagen symbol. In 2016, because they didn't comply with carbon emission standards, billions of vehicles had to be retracted. And then such a huge car maker in Europe today stands to be at a loss because of this carbon emission footprint standard. So the perception of the people about a company is a very important metric. Therefore, CSR is not only important in terms of compliance with Companies Act, but also companies need to be aware of what importance they need to give in doing the activities required. So where do we find this? It is none other than our Companies Act 2013. But as I already said, we do not just stop there. We have to go into the rules. In fact, from 2014, 2016, 17, 18, 19, 20, 21, there are 6 different rules that have come out in the same sphere because of amendments. Over the course of this session, we are not going to just understand these limits of CSR, but the practical applicability. What questions the companies have today? What are these multitudes of amendments? In April 2021, a very big amendment came where increased transparency. They defined all the terms in CSR. There is no legwork or leeway for companies to go against it. As I already said, before we look at amendments, it is important that we understand the basic provisions of CSR. First aspect is applicability. Now, the section is a very simple section where it has said CSR is applicable to every company. So whether you are an NGO, private company, small company, one-person company, or a government company, the minute you cross any of these limits that you see on the screen, that is net worth 500 crores or more, turnover 1000 crores or more, net profit 5 crores or more. Any of this you cross, automatically the company has to ensure at least 2% of the average net profit of the previous 3 years it has been spent. It is applicable to any company. Now, the second aspect, logically what we notice, many companies do not cross this 500 crore and 1000 crore limit, but a large spectrum of companies fall into this net profit 5 crore or more limit, and therefore CSR is not only applicable for large companies, but for any company, even if it's small, profit is earned, comply with CSR. This net profit is also defined. Now, there was a very interesting case where a company said interest income on FD. For that year, they had sold a property, heavy amount they kept in FD, and they said, this is not towards the business. Therefore, we are excluding it from net profit, and only the balance, which is less than 5 crores, the CSR spend is not required. Now, friends, such creative accounting practices have been curbed by the MCA, where they very clearly defined net profit as per section 198 of the Act. Now, another company said 198 is applicable only for public companies. So, for private companies, I will do a different method. All that cannot be allowed. Whichever company, as per 198, what you see on the screen, you have to compute your profit before tax. And if it crosses this limit, automatically CSR will become applicable. So, second question came where they said, which year profit should we take for the applicability of CSR? When the provision first came about in 2013, they said any year, if your company crosses any of these limits, CSR becomes applicable. Now, this was a very difficult provision. So, MCA came out with a clarification and said, as long only the immediately preceding year, which is audited, CSR will become applicable. Then another question came in the case of group companies, where let us take a scenario. The subsidiary company has made more than 5 crore profit. CSR becomes applicable to it. Now, because the subsidiary company has CSR applicability, the holding company should also comply with these provisions. So this has been clarified in an FAQ where they said, CSR, you need to look independent company-wise. You cannot look at it just because subsidiary is applicable, holding need not be applicable. Many practical scenarios, holding company just becomes an investing company and subsidiary company does the actual work. So it has to be a company-wise analysis. Now let us take a scenario. I've said the minute any of this criteria is passed, then CSR becomes applicable. How much of CSR? 2% of last 3-year net profit. Let us take a scenario where previous year there is a profit. The years before that, the company is making loss. Now, whether you will take 2% of this 10 crore that you see on the screen, or whether you net off the loss and whatever is the average profit after that is taken, only the net basis, friends. So practically, these are good provisions which give clarity. The reason is because government wants to enable the company to actually spend the funds towards CSR. Now, CSR becomes applicable. For whatever reason, because of COVID, subsequent years, the company has not done well. None of the criteria is satisfied. Whether in such a scenario, CSR is still applicable or whether the company can sit back and say it is not applicable. Up to 3 days ago, friends, before the clarification came on September 20, 2022, there was a rule. There was a rule that the minute you spend CSR for 1 year, the next consecutive 3 years, CSR is mandatorily applicable. And only if after that you still do not cross the criteria, you can stop spending. Now, many companies made a representation, and recently in 2022, the government came and gave the much needed relief and said, on a year-on-year basis, you can check. Just because it is applicable once, we do not have to go for this 3-year consecutive applicability rule. So what is CSR? We have understood when CSR is required. CSR has also been very clearly defined in the 2020 rules, where they came and told us what is not CSR, gave a negative definition, which is a good stance, because that means whatever else, as long as it's towards the Schedule 7 activities, can be considered as CSR. Now, logically, normal course of business, if you do something that is not CSR, political party, sponsorship, statutory obligations, one-off events, suddenly I have a marathon, I'll say it's for the welfare of people, that cannot be considered as a CSR activity. Certain amendments came up during the period of COVID, where you're a pharmaceutical company, you do research for COVID vaccine, that is actually normal course of business, and the criteria is hit, but they gave an exemption. All real-time basis, multiple circulars have come, friends, to give the much-needed relief and push for protecting the COVID research. Now, let's take the next scenario. Whether CSR has to be monetary spend or whether I can give in kind. Let's take an example. There is a Maggi noodles. It is telling for every product I sell, 1 rupee I'll contribute to the education of girl child. Whether that can be considered as CSR. Let's take one more example. The same Maggi noodles, it is distributing noodle packets during the time of COVID to people. Now, it takes the cost of that product packet as CSR, whether that is allowed. Now, it reminds me of a situation where an auto driver and a priest died and went to heaven. Now, in the doors of heaven, God came and told the priest, I'm very happy with you. Last 40 years, you preach my name. So in appreciation of that, I'll give you a 2-bedroom apartment with an attached bathroom. Have a good time. So he said, please wait. Go in with the auto driver. Next, the auto driver came. God said, I'm extremely disappointed. Now, last 30 years, not only were you a drunkard, but you drove people and also put their lives at risk. So you take the key to the 5-bedroom bungalow with swimming pool and attached bathroom. Now, hearing this, the priest got very upset. My Lord, what is this? And then God said, my son, please remember, efforts are important, but what is important is results from the effort. While you were preaching, everybody was sleeping. While he was driving, everybody was praying. So friends, similarly like that, when we look at contribution in kinds, the effort of the company to give everything in kind is good. But whether that is considered as CSR is very reflective in the FAQs and the circulars that have come. Now, MCA in its FAQ has very clearly said, the definition of CSR says the board should ensure it spends. And because it is used the word spend, there should be a monetary spend. So donation you cannot include. But however, our CA Institute has come out in a timely manner. And the guidance has allowed and said, you can consider on a situation to situation basis, where if you donate in kind, that can still be considered as CSR, by taking its reliance on judgments passed through the Delhi High Court and other aspects of the MCA affidavit of 2014. Now, friends, because of paucity of time, I will be going through different slides. However, I'll be happy to share this PPT with the organizers to circulate for all of your leisure read. Now, let's take another scenario. I'm spending CSR. I have to spend CSR this year. Profit is there. But in reality, we know many businesses, even though book has a profit, actual liquidity situation is pitiable. So the company goes and borrows money from the bank and uses that for CSR. Whether that is allowed? The answer is yes. They do not care how you are spending. As long as you're spending that 2%, you can even take a loan to do the needful. Now, but as auditors, we have to ensure that the going concern concept is okay for that year, because if they're not able to spend even 2% of the average net profit, it is important to look into the cash flow, fund position, and the liquidity of the company. In order to execute the CSR, the Act has very clearly said you need to have a CSR committee. For each type of company, they broadly said at least 3 directors should form part of that committee, with 1 person as an independent director. Naturally, in the case of private company, in some cases, independent director will not become applicable. Therefore, as long as 2 directors are there, it is enough. They've also given a circular and said, in the event where a company has less than 50 lakhs to spend on CSR, then they're exempt from forming this CSR committee. This is important because the minute you have a CSR committee, the compliances are also manifold, where whatever you follow for a board meeting, you need to have separate set of documentation for a CSR committee. You need to have a CSR meeting and resolution, so on and so forth. What does this committee do? Typically, it formulates the policy, ensures it looks into that, pushes it into the official website, assesses the net profit, and ensures spending. Now, all along, it was fine, friends, where many companies will have on paper CSR committee, end of the year, quickly create all of these aspects and they will upload to comply with. In order to avoid this scenario, MCA wanted CSR to happen on a real-time basis. It was felt that the spirit of the law was not captured. So 2021 amendments had a severe blow on the extent of complaints, where they said, now the CSR committee has to have an annual action plan. And this cannot be done end of the year. At the start of the year itself, they have to make this plan, upload it in the website. And MCA didn't stop there. They went on and said, the board has to approve that policy, ensure it's implemented, and ensure the compliance with the website. Now, because of these changes, they started implementing it more seriously. One step further, MCA went and said, it is not only enough if the board is satisfied, the CFO also is now roped in. Nowhere he was connected before to CSR, but from financial year 2021 onwards, the CFO has to certify at the end of the year that the funds have been utilized towards a CSR purpose. Friends, this also opens up a professional opportunity for us to guide the CFO and help him prepare the utilization certificate. Now, let us take a scenario. All of this is done. Beautiful annual action plan has come out. Now, over the course of the year, the committee is not able to follow up with what they have said in the annual action plan. Whether that is allowed. They have said annual action plan, education for children. But actual reality, what they did is they spent it towards PM CARES Fund because they did not identify the right organization. Now, this is allowed, provided the board makes the modifications, they make the suitable upload and revisions are done. And more importantly, documentation is there to prove the same. The 2021 Act has also gone on to define various aspects of CSR. For example, what was felt was many companies started saying we are doing multi-year products. So over a period of time, we will comply with CSR. This year, we are not able to spend. So they came out and they amended and said, what is an ongoing project? And they said any project that is taken up can only be for a maximum period of 4 years. How do we know whether it's an ongoing project or not? There should be a work order issued, there should be documentation, and it has been given to an implementing agency or with a plan of doing it for a period of 4 years. What happens in a scenario where a company has taken up a project, it's as an ongoing project, but it's not able to complete within 4 years? The government does not give a leeway or an option. They said, in the event where you're not finishing it in 4 years, you have to transfer it to the required fund that has been specified. Let's take an example of a CSR activity. I'm sure all of you recognize these brands on the screen. It all belongs to HUL. Now, what HUL did, it went to over 300 villages, rural India, and educated the village about good hygiene practice. Whether this will be considered as CSR. Now, friends, prima facie, yes, it is a CSR activity. But unfortunately for HCL, what happened was the MCA struck down and said this cannot be considered as a CSR activity. Even though it is covered under Schedule 7, it is a permitted activity. What you have done is, when you went to the village, you demonstrated people washing hands, teaching about hygiene by using your own company products. Therefore, this is an indirect marketing promotion. What you have done is, You have enticed them and said, yes, my hand is clean with my product, so please buy the product. Therefore, it cannot be considered as a CSR expense. In fact, this reminds me of one other example. Now, there were two aspiring CA interns in an office. There's a practicing chartered accountant senior sitting there. Noontime, the call comes and it says, is Vijay there? So Gopal answers the phone. He said, yes, sir, Vijay is next to me. The person says, just inform Vijay that his cat played on the roof, fell and died. So immediately Gopal put the phone down. He turned to Vijay and said, your cat played and died. Now, Vijay was very shocked because he was very close to his pet. He stood up in shock and ran out crying. The senior chartered accountant came. He was hearing this whole conversation. And he told Gopal, listen, please be careful. Whenever you're delivering bad news, you should be very gentle about it. You should first say, Vijay, your cat was playing on the roof. Then after 2 hours, you say, apparently it fell down. They're just taking it to the hospital. And slowly over the period of time, that day you tell, apparently it died in the hospital. I'm very sorry. Please go check. So Vijay agreed. Now they moved and did their work. Next day again, around evening time, call came. Same Vijay picked up the call. Immediately he put on the receiver in shock and he stood and he just continued working. Now the CA comes and says, what happened? Who called? He said, no, sir, nothing. So he said, no, you look very shocked, Vijay. Please tell me, was it a client? Did we get any income tax notice? Or did you make any mistake? So Vijay said, no, sir, nothing. Please don't worry about it. Now the CA again came and said, Vijay, I've taught you so many things. So please apply the principles and tell me what happened. And Vijay told the CA, sir, apparently your mother was playing on the roof. She went up the roof and she's playing now. So friends, please remember, just because HUL case they struck off doesn't necessarily mean rural India educating villages. You cannot have a one-fit solution. So how a company executes a CSR, more importantly, how it documents it and the implications of it is extremely critical. Now we are all aware of what comes under CSR. Schedule 7 gives you various aspects. MC has also come out and said it has to be looked liberally. As long as the end goal of one of these boxes are met, it can be considered as a CSR expenditure. Let us take a simple example. Now I'm a sole proprietor private company. I'm doing very well. So my net profit crossed 5 crore. CSR is applicable. During the year, what I've done one day, it's my birthday. So I decided to feed everybody. So about 1,000 boxes I pack food packets and I feed everyone in my local area. Now, what I've done is I've taken this under this first bucket of eradication of extreme hunger and poverty and said, I distributed food. So whatever expense, please use that as CSR. Friends, please remember, this cannot be considered as a CSR activity. By distributing for one day, one meal, you are not doing anything towards eradicating hunger. So if you have to consider this as CSR, there needs to be consistency every week, every month, and the extent to which the impact is made. Let us take another example. I'm a CA office. All my employees need masks. Even COVID is over, but I'm still buying masks for their welfare. Whether I can take this as CSR activity, answer is absolutely not. The provision very clearly says, any activity that exclusively benefits your employees, you cannot consider. So let's take another example. Same CA office. I want to do something for the employees. So I pick all the unskilled workers, not all my skilled employees, but the unskilled workers, and I have a medical health camp. Whether in this case I can justify using my cat story, not one fit solution, the answer is still no. Because we have to go into the definition of what comes under employee, and unskilled employees are also considered as employees. Therefore, anything you do for their exclusive benefit will not be considered a CSR activity. So listening to this, one of the people came and said after session, Madam, then nothing I can do for my employees. Isn't that wrong? Because the whole purpose is I have to take care of my local community, of my employee. Friends, that's where the FAQs really provide clarity. ICAI has given an FAQ where it has said, whatever you do, which is not for the exclusive benefit of employee, will be considered CSR. So let's take an example. I do the same medical camp for everybody in the vicinity, but still only my employees come for it. That is a different story. I can still consider this as CSR. So as long as the company has proof that it has put out notices everywhere, advertisement for this health camp, open to the public. Even if employees attend, it will be considered as a CSR activity. Now, in the same breath, there's one aspect which I think not many companies are aware of, where they assume that apprentice comes under the definition of employee. That is not the scenario, friends. So in whichever scenario where the company has payments to apprentice, it can be considered as a CSR activity with one caveat. The caveat is the Apprentice Act clearly says minimum 2.5% of the total manpower strength should comprise of apprentice. So CSR cannot have what is legally required. So for the same company, whatever comes above the 2.5%, let's take an example. I have a 1,000 employee company. So I have about 100 employees who are apprentices. Now, excluding 2.5%, say 25, the balance 75, whatever payment I make can be considered as a CSR expense. Now, let's take the second scenario. Over and above this, I still pay my employees to help me execute the CSR activities. You're saying I cannot take that at all. Again, no, friends. Up to 5% of my total CSR expense, I can consider as if it is an administrative overhead. So what you see on the screen, all these will be included in that 5% limit, whether I pay a legal fee for someone telling me this is CSR, not CSR, office supply, employee. So whatever cost I spend, up to 5% of my total CSR expense can be considered under this bucket. The other aspect, of course, as auditors, we worry about the tax implications. Now, Section 37 has very clearly said that whatever you spend on CSR, you cannot take as a deduction as an expense. So you need to disallow it in your memo. However, if you give it to the specified funds, the sections that you see on the screen, whether it's the PM relief fund, which is eligible for ATG, you can claim ATG. Even though it is still a litigative aspect, there are many case laws which favor the companies to avail the ATG and Section 35 benefit, even though it is spent towards CSR. Which comes to the most important aspect in my view, the one area where we have had maximum amendments in the recent past, which is an implementing agency. Now, friends, you've determined what CSR is, you've determined what you have to set aside. What do you do with the funds? Some companies, they have their own foundation, they create their own trust, they give it to that and spend through that for CSR. Some companies don't do all that, directly find these different causes and spend on it, which is about 53% that you see. Many companies, what they do is they're not able to find the time to identify CSR activities. So they go donate to an NGO, which will then do it. Now, all this while it was happening on a non-regulatory basis where companies were doing it as they pleased. Now, in 2021, an amendment has come which said, you cannot just like that find an NGO and give, but it has to have a CSR registration number with effect from April 1, 2021, where they said, if the company is doing on its own, you do not need to get the CSR one. However, if the same company is forming its own trust, then it has to mandatorily be registered under 12A and ATG. If the same company does not form its trust, but finds another Section 8 company or a trust, then that trust or Section 8 company has to be registered under 12A ATG. Not just that, if it's to a third agency, then it has to be in existence for a minimum period of 3 years. The reason why they brought this was many funds were getting embezzled by different entities. In order to have a catch on that, they said they brought up these provisions. And of course, if you give it to an entity established under the Act of the Parliament, then you do not have to register the same because it goes to the government effectively. So this again opened up professional opportunities, friends, where as a CA, you need to issue this Form 1, CSR Form 1 certificate, and then only they can upload it in the MCA and become a CSR applicable organization. The risk is, if your client is not aware of these provisions, then whatever he spends will be considered as void ab initio. That is, it cannot even be considered as a CSR expense. Therefore, automatically, he'll fall under the non-compliance bucket of CSR activities. They've also come out and said, we understand globalization, all of that. So now international organizations can also help the Indian companies with CSR. What they can do is they can give them ideas how to design, monitor, evaluate. But You can never give funds to an international agency or a company to spend on your behalf through CSR activities. So rightly so, they wanted to ensure that the monetary control is still within India and has been done properly. Now let's take an example. I found an implementing agency, but to find that implementing agency, I had to spend about 1-2 lakhs because it was very difficult to find. And I spent that amount and found the agency. Whether this amount that I spent to find that implementing agency, can it be considered as a CSR expense? Clarification has come that it cannot be done so. Not only that, this implementing agency, in order to spend my money on CSR, had some expenses, survey expenses, legal charges. Whether that can be included in CSR expense, the answer is no. The reason is they truly wanted the society to get the full benefit of it. So all these costs between you and the implementing agency will become irrelevant in the front of CSR. Let's take one other scenario. Today, as law stands, you need to ensure that within for that financial year between April to March, you spend on CSR. In the event where you don't spend, within a period of 6 months from the end of the year, you have to put it into the CSR fund. We will go through these aspects a little bit in detail. Now, let's take a scenario. I have given the money to an implementing agency. From my end, I've identified, I've spent money. I'm not even claiming that as CSR. I given the money to them. Whether that implementing agency is spending or not, is it my headache? Absolutely yes, friends. The Act very clearly says the responsibility is on the company. So in the event where the company has given money to the implementing agency, the implementing agency is sitting with it, it is still considered as if the company has not complied with the provisions of CSR. Therefore, we have to ensure for the companies for whom CSR is applicable, who are giving it to this implementing agency, point number 1, CSR1, whether they have a CSR registration number, obtain that as a CA. Point number 2, end of the year, you need to get a confirmation from the implementing agency that whatever money this company has transferred has in fact been utilized towards the projects. Correlate that with the CFO certificate and then issue your audit report for the current year. Now, because of these issues that we spoke, that it is difficult to find an implementing agency, the government in July 2022 has now released a national CSR exchange portal. Very, very timely help they've done, where if your company comes and says, Madam, I do not know where to spend the CSR, please direct them to this portal. It has a list of all the entities with CSR1 who have done CSR activities. So you can create a login, you can go check education, and then you'll get all the implementing agencies. Very, very good portal and extremely user-friendly. The other aspect is, as a part of CSR activity, say I construct a school for the purpose of education, whether that is CSR, answer is yes. But what amendment has come, friends? Earlier, many companies used to construct hospitals, schools. They'll capitalize that asset and slowly they'll claim depreciation. In order to avoid all these confusions, and also when you create an asset, the value will be higher, automatically your asset position will be higher. But true sense of CSR is there is no enduring benefit from anything you do towards CSR. So MCA has come out and said no company is permitted after October 2021 to have any asset called CSR asset in the balance sheet. They have to mandatorily transfer it either to a Section 8 company, trust, or a public authority, or directly to the beneficiary. If it's for the school, you transfer it to the school or to a public authority. What they have not clarified so far is they've only said it should not be held by the company. So many companies are innovative and still keeping the title deeds and just transferring the asset as a book entry. It is advisable that it is entirely transferred even with the title deed. Naturally, there are going to be additional disclosures in this regard in the board report. Let's take another scenario. I want to construct the CSR asset. So what I've done, I've accumulated 2 crores. I need 1 more crore. I put this 2 crore into fixed deposit. Now, over the period, I'm earning interest from this FD. Whether I can use it for my business, whatever interest, the answer is no. The minute you earmark something for CSR, whatever surplus comes from it has to be flowed back into the same project. So the interest you earn also, you have to spend it for the CSR project. If not, if it is remaining unspent, you need to ensure you transfer it. Now, there are two manners in which transfer of CSR has to be done. Friends, this is important because it is mandatory from financial year 2021. Where in the event where you're doing an ongoing projects. Now, we all said up to 4 financial years, I can continue a project. If in the annual report you've mentioned that it's an ongoing project, then after 31st March, before 30th April, you have to transfer it into a separate bank account. In the event where you do not have any ongoing projects, for that year, CSR is applicable, but you have not spent. Then within a period of 6 months, before September 30th, you have to mandatorily transfer it to the CSR approved funds. What are these funds? Is what you see on the screen. You cannot just like that transfer to a government fund. Only the specified permissible funds, the transfer needs to be made. Now let's take a scenario. A very intelligent company, what they did not do up their books on time. So March, April, they saw that they made profit, CSR is applicable. So what they said is, I have 6 months time. Before September, I have to transfer to the fund. What I will now do is, I immediately spend it on a good project for CSR. I get good PR also. Unfortunately, FAQ has very clearly said, whatever you have to spend by March, you have to spend by March. In the event where you do not spend, you cannot take March to September as a timeline to spend on projects. That amount you have to mandatorily transfer to the CSR fund. So it became a double transfer for them, where they also spent on a project, but that project was not considered for the year for which they assumed they spent it. So let's take another scenario. Now, naturally, for the current year, they've overspent. More than 2% they've spent on CSR because they assumed they were doing for the previous year also. Whether you can carry this forward, up to 2020, carry forward of CSR was not allowed. Today, as we speak, it is allowed. Therefore, for up to 3 years, this company can carry forward the expense. Let's take a scenario where this year it's not even applicable for this company. Can I carry forward for next 3 years? The answer is no. Whether it is going to be applicable or not, for the 3 consecutive years from the year in which you have accumulated, you can carry forward. Otherwise, it will lapse. Now, what are the consequences, friends? All these are very different subjective provisions. What happens if, for whatever reason, I did not know, I did not spend? What started as comply or explain became comply or suffer when it comes to CSR. In fact, in 2013, 14, 15, they just said, if you do not spend, board just has to mention why it didn't spend. Then between 17 to 19, they said, if you don't spend, please go to prison. All the companies got enraged with this. Finally, they came out and said, okay, we will cancel this clause in 2019. They revised and said, don't worry, it is only going to be a simple penalty regime where if the company doesn't spend twice the amount or up to 1 crore you have to pay, all the officers 1/10 of the amount up to 2 lakhs default. So this is nowhere simple, friends. The amounts you see are very, very high, even for the Companies Act provision. Also, at this juncture, we have to understand the difference between penalty and fine. If it is fine, it will be only levied at the adjudicating level by the courts. If it's penalty, the officer himself can levy at the MCA level. Therefore, it is extremely important to be compliant with the provisions of CSR. One more step further, where auditors are now have to look into it, not only board, CFO and CSR committee. If the provisions are not complied, you need to qualify the audit report. And now Schedule 3 has also given specific disclosure of what the auditor needs to report. CARO has a clause where if they have not spent on CSR of mentioning the same. One other aspect of CSR that is increasingly taking precedence since 2020 is the requirement of an impact assessment. Now, friends, this aspect is only applicable for large companies where their average CSR spend for 3 years is more than 10 crores and per project spend for CSR is more than 1 crore. In such a scenario, after completion of 1 year of that 1 crore project, the company has to give out something called as an impact assessment report. There's a lot of gray area in this because they have not said who does an impact assessment report. It's a very new provision. In fact, in my view, it is an opportunity for professionals like us to prepare an assessment report, approach big companies to take this up. And today, friends, it's going to be very simple for us to approach these companies because you go to the National CSR Exchange, you'll find the drop down of all the companies which have enrolled with it for whom CSR will become applicable. There is one limit that the government placed where it said, because these companies have to spend a little more on CSR, up to 5%. Now already 5% they allowed as admin overhead. They said additional 5% they can take of the total project or rupees 50 lakhs, whichever is lesser. Now naturally these large companies said, if I have to do an impact assessment for every project beyond 1 crore, my spend is going to be very high. So MCA came out in September 2022, 3 days ago, and said, don't worry, we have now amended. What we said, additional 5%, we'll make it 2%. But we'll say 2% of 50 lakhs, whichever is higher. So let's take an example. There's a company spending 100 crores on CSR. Now 2% of the 100 crores come to 2 crores. So up to 2 crores now, because of this amendment, companies can claim that as an impact assessment expense. Over and above this new provision, over and above the CSR Form 1, where every company should have a CSR number, one other form has come out in February 2022, which is applicable to all companies for whom CSR is applicable. This is called Form CSR2. Friends, it's a very, very detailed form. It's an 11-page form. And this is applicable not from the current year, but from financial year 2020-21 itself. Up to 30th June 22, time limit was given. Now for financial year 21-22, up to 31st March 2023, time limit is given. So kindly ensure that this has been done. For 2021, it was a separate form. But from the current year onwards, it is an addendum to Form AOC3, XBRL, or whichever annual return you're filing. It's a very detailed form where whatever you've done for CSR, spent, unspent, how you've done it, all those questions are there in this 11-page report. Kindly ensure your client is in compliance with it. Now, with that, I'm concluding the session. Naturally, as chartered accountants, the opportunities for us in CSR is aplenty. Every other week, a new amendment is coming. Companies visibly are suffering. The reason is because they are still confused what will come under CSR, what is an impact assessment. They've mandated it, but no clarification has come. So to be closely involved with the company on what they are doing as CSR, giving them opinion and views, whether you can take this or not. More importantly, now handholding the CFO. Now the CFO has to certify. So to check that as a chartered accountant on the utilization, to tell them about these forms and changes that come, there is a lot of work that needs to be done. In my PPT, you will also find that I have given a lot of formats of how you can do the annual return, so on and so forth. So with that, I think I've stuck to my time limit and I would like to conclude my presentation for today. I truly believe learning comes from interaction. So if any of you have any questions, whether related to CSR or not, please feel free to ask me and I'm more than happy to answer. For whoever wants the presentation, I'll also send it to the organizers, but you can also feel free to email me and I'll share the same. Thank you once again, WMEC, for giving me this opportunity to present here on a bright Wednesday. And I'm very proud of the initiative that has been happening. A huge kudos to the team for the kind of organization and effort that they've taken in making this a reality. Thank you.
Thank you, ma'am, for such an enlightening deliberation on CSR. And it was so nicely explained that we don't have any queries left. And I personally thoroughly enjoyed your session, your PPT, and the way you covered the topic was remarkable. And I believe it would have surely benefited members from all over India. And I thank you on behalf of Women Members Empowerment Committee. And I also congratulate WMEC team for successfully conducting 24th edition of the Sky High Symposium. We hope to meet all the participants next Wednesday. And I urge everyone to continue showing such love and enthusiasm to keep going. Thank you, ma'am. And thank you, everyone.
Thank you.
It was a wonderful presentation, ma'am.
Thank you so much, Shilpa ma'am. Thank you.